Very much. Well, a Fox Business alert for you. As oil hits new highs, the ripple effect is being felt all through the economy.
The LA Times is reporting that discount airline JetBlue delaying the launch of its first transcontinental routes that would take flyers from New York and Boston to Los Angeles. According to reports, the high price of fuel is just, they can't figure out a way to make the flights profitable, so they're scrapping it.
All the airlines are struggling with the same economic realities right now. Is it time for everyone to get behind proposed mergers that could create stronger air carriers? Our Fox panel is here to talk about it, including Victoria Barrett from Forbes, Peter Schiff, author of Crash Proof, and Terry Keenan from Fox News. Good to see you all. Terry, first to you. Will this sort of put pressure on the politicians to grease the skids of those mergers?
Well, the skids are already greased. I mean, we're seeing mergers, every month or so, but I don't know how the mergers are going to help these airlines cope with the high price of oil. And the fact that they didn't hedge,
Bob Crandall doesn't think they will help.
You run a business and, your biggest cost is fuel. You'd think maybe you would hedge against the possibility of higher fuel prices, and these airlines haven't. And, they can't pass, especially an airline like JetBlue, can't start charging extremely higher prices because that's what they're known for. They're cheap fares, so they're kind of in a box.
Peter, Terry makes a great point. Are mergers the panacea for oil prices, or are you dealing with apples?
Well, they're not the panacea for the public. They're ultimately going to be the thing that has to happen to save the industry. The bottom line is Americans are now too broke to afford to pay airlines enough money to fly in their planes, given the current structure.
Wait a minute. Every flight I'm on is jam-packed.
Yes,
I know they're cutting capacity, but stick to the oil angle.
No, the flights are jam-packed because the airlines are losing money. What they need to do is have far fewer flights. They need to cancel a lot of flights. They need to get lots smaller. They need to have fewer flights and then double and triple their ticket prices. Then only the people who really need to fly for business and who are wealthy, they'll fly and the airlines will be profitable. But there'll be a lot less people working in the airline industry and there'll be a lot fewer Americans flying. But that's the price we're going to pay for what we've done.
Bob Crandall, the former head of American, who did a great job with American Airlines, was on Scoreboard a couple of weeks ago, and he said, look, there's no problem that the right price can't fix. He said it is all about pricing. He said mergers is not going to help anything. If you take one bad company, another bad company, you put them together, you'll have one big bad company. So it's not mergers, it's pricing. That's the issue.
Well, yeah, prices have to come up, and they will go up, and it's bad news for American businesses. It's bad news for those of us who want to go on vacation this summer. And it's going to be bad news for JetBlue in the sense, they're cutting their capacity. They're basically acknowledging that they can't grow profitably. That's a really curious thing. It's Peter's right in the sense that, yeah, Americans aren't willing to pay high prices for that wonderful seat they're going to get on a flight. Businesses are going to cut back their budgets. This is an industry that will consolidate, unfortunately, because they'll justify, that they'll be able to cut cost as consolidation happens, and that'll make it easier for them to force up prices. If you've got fewer airlines, less competition, it's easier to raise prices.
But also less capacity.
Yeah, less capacity. And, the airlines are quietly cutting flights. I get a phone call once a week when my husband's traveling. Oh, your flight's, his flight's been canceled. I don't know why they're leaving the message in New York when he's in Dallas or Utah or wherever, but they do, and they are canceling flights.
Let me throw this out to you guys. One of the shrewdest, smartest people in airlines is David Neeleman. He's going to, by the way, be on Happy Hour tonight at 5 p.m. Eastern with Rebecca and Cody because he's launching this new airline called Azul. Somehow he's figuring out a way that he's going to launch an airline that makes money. Is there still a chance, no matter what all the options are around there with high fuel prices, that...
I don't know. It's tough. Maybe he can. I don't know. He doesn't have all these legacy costs. He doesn't have the unions. He doesn't have a lot of the fixed overhead that these bigger carriers have. But the reason the mergers ultimately will work, and they only work if they get rid of capacity. They have to lay off people. They have to cut routes and cut flights. That's the only way they can. They just can't merge and be two huge companies.
So Victoria, Skybus, another low-cost airline that went out of business a couple of weeks ago, we had the CEO of Skybus on. He said that if we see anything close to $150 a barrel oil, we're going to be out of business. He's out of business. JetBlue, all the other discounters, are they eventually going to go bye-bye?
I don't think they go bye-bye. Southwest has done a better job than all the others in hedging their fuel prices. They seem to be doing okay. There are ways to manage the risk of higher prices, and ultimately, we, the consumers, are going to get stuck paying the bill. It's going to be a hard thing, though, because a lot of consumers can't pay more for tickets.
Yeah, you know,
this is the problem that faces all businesses right now.
One of the problems for the discounters is that these big carriers are operating and losing a lot of money. If we can get these companies to consolidate and dramatically raise their prices, then the discounters can still raise their prices and be discounted and operate.
As Liz just mentioned, JetBlue founder David Neeleman will be on Happy Hour tonight. Yep. Neeleman's going to be talking about this new Brazilian venture and the state of safety in the skies. Take a listen.
If you look at statistics of, used to be, 1 in a million chance of having an accident. Now it's 1 in 300 million. And it's so statistically insignificant. And a large part it's been collaboration between the airlines and the FAA on inspections, on pilot training has been a huge issue.
Are you saying the government has actually done something good for the consumer at home at some point?
It has. I mean, every time there's an accident, they figure out what happened, what human factor, and mainly it's human factors, caused that accident. And then they close that loophole to make sure that nobody can make that mistake again.
We'll talk about Brazil.
Wow, we're dying to hear about that. You can catch the entire interview on Happy Hour with Cody Willard and Rebecca Gomez tonight at 5 o'clock Eastern Time. Azul is the name of his new airline.
Well,
smart guy.
He's a smart guy, and guess what? Peter Schiff is a pretty smart guy. When it comes to gold, yep. When it comes to gold, gold is regaining some of its glitter, even as there's talk of the dollar staging a comeback.
No bigger gold bug than Peter. We're going to talk to him about. I'd like to know where you started buying gold, what price it was. Don't tell me yet.
Don't tell us now.
Don't tell me yet. But how many years ago and what price it was then? And also, he'll talk about what's ahead for the precious metal next on Fox Business. To go.
Cape Cod and Baskin Robbins.
It's proof that ice cream was good for you because he lived till he was 90.
Absolutely. Well, we wish him the best. We wish his family the best, by the way.
I want to look at gold right now, David. Gold is, well, of course, we know it's retreated from its $1,033 a troy ounce, back from that glittering price before a couple of months ago. But crude right now is gaining about $3.60 at the moment to $877. And change there. But the precious metal, the rallying's really started over the last few days.
It has taken off again, although we should mention it's well below the $900 level. But will this current rally last? And should you be taking a look at gold for your portfolio? Good hedge against a lot of different things. Let's ask Peter Schiff, author of Crash Proof. And Peter, first of all, Liz and I are dying to know, at what point did you first start buying a lot of gold, quantity gold?
Well, first of all, my favorite flavor was peppermint stick.
Oh, yeah,
right,
peppermint
good.
stick, sure.
But I started buying gold stocks for myself and clients in 1999. I think it was the first time I started buying them.
How much was gold per ounce back?
Well, gold was under 300. It was and it was near the peak of the NASDAQ, and when it really started to get ridiculous, and gold stocks were ultra cheap back then, and I started buying them. And then I started selling and recommending physical precious metals, and I bought myself both gold, silver, platinum, probably in 2001, I think I started selling it, and now, we sell a tremendous, I probably sell more physical bullion per month today than I used to do in brokerage business when I first started, in 2000. So we're selling a lot of gold.
Where does it go from here?
A lot higher. I mean, first of all, look where oil is. Oil is now at $120 a barrel. So if you look at the relationship that gold has to oil, you would expect it to be close to 10 to 1. So with $120 barrel oil, you should see gold around $1,200 an ounce. And I think it'll get there before the end of the year.
Help me understand this, though, Peter, and pretend this is the average investor asking. What do you do? Gold is this kind of thing that you buy the bars of it or you buy the physical gold and you don't do anything with it. You just hold it.
Yeah, gold is money. And money retains its value. That's the good thing about money. The problem is what everybody is using that they think is money, dollars, doesn't retain its value because Ben Bernanke is printing it like crazy. In fact, there was news that came out today on Freddie Mac, these huge losses that they have. And, if Fannie Mae is going to go bankrupt and Freddie Mac unless the Federal Reserve creates a substantial amount of inflation to prop up the housing market. And so the only way that these companies won't go bankrupt is if they create so much inflation, gold's probably going to be at $5,000 an ounce.
But if the dollar does make a comeback, if the world considers its current moves and its future moves to be serious about stopping inflation, to not lower the interest rates anymore, will gold continue to go up?
The dollar's not going to make a comeback. I don't care how much they talk it up. it's going to continue to
sink. That's not what I asked. If it does, if the dollar does hold its value.
It's impossible for that to happen. You know, you might as well ask me, you know, if pigs sprout wings, can they fly? The dollar's not going to go up.
Paul Volcker did stop inflation back in the 80s.
Right.
It's possible to do it.
No.
If Bernanke does it, will gold continue to go up?
No, he can't. What did Volcker do? He put interest rates at 20%.
Up to 20%.
All right, is Ben Bernanke going to put interest rates at 20%?
So far he hasn't.
Yeah, and
so far he hasn't.
And if he did, would our economy completely collapse if we had 20%?
It didn't back in the 80s.
Well, because we didn't have a $10 trillion national debt financed with T-bills.
We had a lot of debt compared. Yes, compared to the GNP.
No,
it was still substantial.
Back in 1980, the national debt was majority of it was 30-year government bonds, and it was owned by other Americans. Now the debt is majority T-bills, 2-year T-bills owned by the Saudis and the Chinese and the Japanese. It is a huge difference. There were no adjustable rate mortgages. Basically, the Fed no longer has the tools to defend the dollar. All it can do is debase it.
Watch this, David. Watch this. Peter, should we go back to the gold standard?
Well, Corey, you know the answer to that question.
His head's imploding.
No, well, we wouldn't have had
Peter,
a NASDAQ bubble. We wouldn't have had
wipe your mouth.
Yeah, we wouldn't have had a NASDAQ bubble. We wouldn't now be on the verge of an unprecedented collapse in the American standard of living because of years of monetary excess. I would have much rather had a gold standard than Alan Greenspan and now Ben Bernanke.
Actually, it is true. If we had linked the dollar to gold back in the days when you first bought in a big way in 1999, what would oil be now?
10-year chart here on
what would oil be now?
Well, I mean, look, you go back even further. We separated from gold in 1971. If we were still on a gold standard, oil would be about $3.50 a barrel. Wow. You know, all the difference is inflation. And, you know, when the government...
we'd be making about $500 a year.
Well, but we'd have a higher standard of living. I don't know what we would be making. But, yeah, we wouldn't have as high a salary, but the purchasing power. That's what's important. And, you know, when the government now, they look at oil prices at $120 a barrel, they look what's happening with food prices, and they say, well, this is because of global economic growth, it's because of China, it's because of OPEC. It's not. All of it is because of the Fed. It's all because they're printing money, and that's why you got to own gold.
Okay, so can we broaden this discussion to other metals like silver and platinum, and then maybe the non-precious ones?
Well, silver has always been a monetary metal, and I think, you know, gold and silver kind of go hand in hand. I think that there's a bigger move coming in silver. If gold is at $5,000 an ounce, you know, silver could be at $500 an ounce, and the ratio might be 10 to 1. Now it's, you know, 40, 50 to 1.
By the way, when do you think gold will be $5,000 an ounce? How long from now?
Well, I mean, I don't know exactly when. I don't have a crystal ball to know the exact date.
Ballpark figure.
I don't know. Probably before the end of maybe the next presidential term. So for 5 years from now, it could be up there. I think it could be, you know, it could be $2,000 an ounce sometime next year.
All right,
Peter, we'll save the tape.
We will.
Save them all. I save them myself.
All right, Peter Schiff.
I'm shocked that he would save his own tapes. Of course.
Well, we're going to switch gears. Moments to go until the closing bell, and stocks are still in the green.
This despite another record high for oil. Fannie Mae, though, is jumping right now. So let's bring in our Fox panel, because this on a day when D.R. Horton had a loss of $1.3 billion for the quarter. A lot of things swirling around on the floor, I'm sure, Tracy, there at the NYSE.
Yeah, that whole Fannie story is interesting because it was down a ton this morning, came back. A lot of it had to do with the short covering because they said they were going to start to raise capital. Raising capital can mean actually a good thing for the stock that gets everybody in a tizzy, and they got to cover their shorts because they, of course, the shorts are anticipating the stock's going to keep going further. So that helped turn the market a bit. But keep in mind, too, of this 57 points, most of it goes to Chevron, Exxon, Microsoft, Alcoa. Those stocks are all up pretty decent today on the Dow. And that really makes for a fair chunk of our gain today. We were down 80 points this morning. So really, we've swung about 140 points here today. Kind of a decent move considering. And again, it was all about oil. Although, as Alan Valdez was saying earlier, many people are confused by this whole oil thing. Oil's up, the market's up, it's not normal. Many guys down here don't even know how to trade on it. But they got to get their money back in this market somehow, and we are seeing buy orders come across the tape. Not to mention, the volume is a little bit better than it was yesterday. And as you were saying, it's the commodities today. It was the oil exploration stocks that were big winners. That group was up 5.3%. Anadarko being one of the leaders down here, Apache, Noble, Hess, and of course the coal stocks all up, Peabody, Massey, and gold. Again, gold stocks were up. The biggest loser down here today, Playboy Enterprises, believe it or not, had a dismal quarter. Apparently you don't have to, you can get it for free on the web, so why should you pay for it after all, I guess. But otherwise, we're holding. We're here 56 points up.
Peter
Not
says
so bad.
Peter Schiff, and I can't imagine Peter Schiff at the Playboy Mansion. I'm sorry, Peter. I just can't imagine. But you were at their party at their Kentucky Derby party.
Yes.
Congratulations.
Was Hef there?
He was there, yes.
Yeah.
Thanks for the visual, David.
By the way, did you talk to him about gold?
No. I actually, by the time I got there, he already left. I got there late.
Peter, did you find a way to be miserable at that party, too?
I'm not miserable.
He's happy. He sleeps on gold.
I own gold and oil. Why should I be miserable?
Actually, you don't go down there to see Hef anyway, do you?
No, I saw the Derby and I had some fun.
We kid because we love. But
what there's the thing what they're talking about with Freddie. I mean, the news is horrific. But the news is horrific. Sure, they're going to raise capital.
Horrific, right?
Yeah. Well, they're going to raise capital because without it, they'd go bust. But the problem is they're going to issue a preferred stock. It's going to have a huge dividend. It's going to dilute the dividend on the common. This is bad news for the common shareholders. Not good.
But don't the people buying in today know that?
I don't know what they know.
They're savvy investors.
Look, I think they're covering shorts. They're booking some profits, and they're going to come back. The stock's going lower. It's bad news.
I mean, there's a lot riding on these two companies being solvent because these are the vehicles that the government's using to try to rescue the housing market.
And the government might have to, they haven't had to before, but they might have to come in and rescue these companies. So they're almost fail-proof.
Yeah, they are, but that didn't help the stock, stay in the 60s, now down at 30. But we have to watch these companies.
It's not countrywide, though.
Very carefully. Well, they're not, it's not countrywide because the government has to keep these two companies in business.
Does it amaze you, Terry, that the government paid some 200 employees at Ofeo, the regulators of Fannie and Freddie, and still all of these problems happen? I mean, does that speak to government access?
It doesn't surprise me at all. But both these companies are basket case. I mean, Fannie didn't file its financials for a couple of years. If it was any other company, it would have been kicked off the New York Stock Exchange.
And yet, Franklin Raines from Fannie walks away when you add it up, even though he had to pay some fines, with about $75 million.
Well, that's the way it goes on Wall Street. You lose.
That's the way it goes inside the Beltway.
Yeah, but the problem is too for these companies, what they're all trying to do, and the government is loosening up on their lending standards and their capital requirements to encourage more reckless lending. And what they're trying to do is prop up home prices, but they have to fall.
Be quiet for a second because there's a beautiful woman that wants to talk. Victoria, go ahead.
Oh, well, I completely agree. We're relaxing the standards on these companies to try to ease the pain. But gosh, I think we're in for a whole lot of pain at some point when these companies get slammed by lower and lower housing values. I mean, this could be a massive taxpayer bailout that would make Bear Stearns look like a minor event in Wall Street history.
Yeah, that would be a horrible situation. I mean, Terry, even Warren Buffett says, it's a good thing what the Fed did to bail out Bear Stearns because now he doesn't see another financial meltdown of that caliber. Yeah,
probably not of that caliber, but who knows what happens with Fannie and Freddie. And President Bush, to his credit, went kicking and screaming into loosening the standards on these companies and letting them lend bigger mortgages. He didn't want to do it, but finally he was convinced to do it.
Franklin Raines was back in the Clinton administration. That's when the shenanigans at Fannie and Freddie go back throughout all the administration.
But remember, all the bad debt that forced Bear Stearns under, it still exists. Now it's at the Fed.
Exactly.
The losses are still here. We're just postponing the pain. It would have been much better, as bad as it would have been, to have allowed Bear to go under, and J.P. Morgan and Merrill Lynch and Lehman Brothers. It would have been better than what the Fed did.
Is Disney going to meet its estimates quickly?
Oh,
yes or no?
I have no idea.
What do you think, Victoria? Is Disney going to make it?
Disney's.
Are they going to meet their estimates? She doesn't know. What do you say, Terry?
I don't like the number.
Terry's the only one willing to go out on the limb and saying, I think they will. All right, as the closing of the bell rings and the people cheer, it is a green day on Wall Street. We're happy that there were profits that came into the street, but the business day continues. And here's the financial news you need to know from Fox Business.